Morning, guys. It's Wednesday, March 26th, 5:26 a.m. Central Time. Grain markets are mixed early this morning. May corn futures up 3/4 cent at 458.5. May soybeans up 1 3/4 at 1003.5. May Chicago wheat down 0.5 cents at 542 3/4. May Kansas City wheat down 1.5 at 567 3/4. May spring wheat unchanged at 588.5. We had some corn news out of Brazil. Let's start there.
Rising corn prices are expected to contribute to inflationary pressures in Brazil. Prices have climbed amid low stock levels and growing demand from the ethanol and livestock industries. Additionally, concerns persist regarding Brazil's second corn crop due to adverse weather conditions. Some areas of Brazil have experienced more than a 23% year-over-year jump in corn prices. Agricultural consulting group Datagro estimates that the surge in prices could cause food inflation to increase by 1% over the next 6 months. Over the last year, prices for poultry, beef, and pork have risen sharply, increasing by approximately 11%, 21%, and 20%, respectively.
Last week, I heard rumors from several different people that I know in the industry that Brazil was buying corn from the United States. Just small amounts, but it's not something that you hear every day. It has happened before and will happen again. Corn prices in Brazil are very, very strong and have been trending higher. I pulled one location here, Southwest Piranha. This is wholesale corn prices. I think it's around $5.82 per bushel. Somebody please check my math. I ran this through ChatGPT to do the conversion because I was too lazy to do it myself. The way that the pricing works, if you guys are looking at the pricing, it's priced in Brazilian currency and it's per 60 kilogram bag. So there's a lot of conversion there. But in any case, Brazilian corn prices are very strong because the Brazilian corn situation is very tight. USDA projects that in Brazil, the ending stocks to use ratio will be 2.2% at the end of the marketing year, meaning that for every bushel of corn that they use either domestically or they export, they're going to have 2.2 bushels left over. So they don't really do storage in Brazil the way that we do in the US. I don't think they have the storage capacity. So they're not really big on ending stocks. Ending stocks of corn in Brazil are going to be less than 3 million metric tons this year, according to USDA. So it is, I mean, you would think it's kind of odd and counterintuitive for the world's second largest corn exporter to be importing corn from the largest exporter, which is, I think, what's going on here. And these rumors are not gospel, by the way, but it's probably happening. It would make a little bit of sense. Brazil just needs to fill some gaps. This is not something that needs to be a bullish catalyst with regard to prices. I think we sold a little bit of corn to Brazil last year. I know in 2022 that we did. So it's not totally abnormal. And the amounts, if this did happen, if we sold corn to Brazil, the amounts were small enough that they didn't trigger a flash sale last week or early this week. So less than 100,000. And there could have been a bunch of small sales. I think it's small business, but it is indicative of just how tight the corn situation is in Brazil. And really the global situation is pretty tight too.
U.S. corn futures declined on Tuesday amid accelerated planting progress in the South. The May 25 contract fell nearly 7 cents to settle near 458 per bushel. According to the USDA, corn planting progress stands at 65% in Louisiana, 45% in Texas, 14% in Louisiana, and 10% in Arkansas. The decline was also attributed to traders positioning ahead of USDA's grain stocks and prospective plantings reports, which will be released on Monday.
Big report on Monday, and you've got two pieces of the report that could move the market. You've got the acreage numbers, which are the ones that are more discussed, more widely discussed. And then you've also got the quarterly grain stocks numbers, which can move the market. And you could even have the surprise there. Ahead of the report, the Bloomberg survey, the analysts that they polled are looking for 94.4 million acres of corn and 83.8 million acres of soybeans. So the corn acreage number would be up sharply from 90.6 last year if realized. Soybean number would be down sharply from 86.1 last year if realized. Keep in mind that those numbers, that's a survey of what a survey is going to say, essentially. The farmer surveys went out the first couple of weeks of March, and USDA will be the first to admit, NASS will tell you, we don't like this March report. Pete Meyer talks about this all the time. We don't like this March report. It's not accurate. It's not reflective of reality. We don't get the real better gauge of the acreage situation until June. So I think that the market will trade this to some extent, but you've got to take the numbers also to some extent with the grain of salt, because they could be off by 2 or 3 million in corn. There are plenty of traders and analysts out there who believe that 94.4 is too low, that maybe the actual number in reality will end up at 95 or 96, or dare I say 97. I'm in the 96 camp personally. I see where corn is around levels that resemble break even for new crop delivery for some farmers, still below production costs for a lot of farmers, but the competition is much worse. Soybeans are much worse. Cotton's much worse. Spring wheat is much worse. So I don't know how these other crops are going to hang on to acres. I could be totally off here. You look at the corn chart, we've kind of been consolidating the last couple of weeks, I'd say, in May futures. Here's December futures, which will become a little bit more important to you guys now. I think that this kind of trend support in the 440 neighborhood is important. But yeah, be prepared for some volatility next Monday.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about some of our recent premium videos?
Yesterday, we did part 2 of a 2-part series with Chris Barron, Farm Budget Mailbag. We had a whole bunch of fantastic questions that came in from our premium crowd about everything from budgeting to how to handle equipment and the budgeting side there, side hustles, off-farm income, marketing, crop insurance, all sorts of stuff that I think would be applicable to you guys. The video that's going to go out today, it's not out yet. This is going to be thought-provoking, and I think it provides some outside of the box thinking with regard to marketing. Shay Folk from AgView Solutions is one of our regular contributors, and he was on with me yesterday. Shay's a young farmer in Central Illinois. He's 31. Shay is sold up to his APH on 2025 corn, which is a crazy thing for some of you guys to hear. And he's probably in the top 1% of 1% of aggressiveness when it comes to corn sales for this current marketing year. He discusses the details and why. And I asked him if I could make this the title of the video because I didn't know how much, but he's fully transparent about everything. And he went into detail. I asked him, Shay, have you re-owned any of this? Is it hedges? Is it HTAs? Is it cash sales? What is it? I think this would be a really great video for you guys to watch, just to give you some outside of the box perspective. Somebody who's doing something totally different than everybody else and has been really successful doing it that way. We also had kind of a second part to the video where we talked about seasonal target orders. And I think that will apply to almost everybody if you're farming this year. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. This is a $50 per month subscription. You can cancel at any time. There's no other fee, no other obligation. Nobody will try to sell you anything else. You'll get 2 emails per day from us. You can jump on the text messages list if you want. And that's it. The videos are super easy to play on your phone. Give that deal a shot this morning, guys.
Russia and Ukraine have agreed to allow safe travel in the Black Sea and to halt attacks on each other's energy facilities. The U.S. brokered separate agreements with both nations, marking the most significant step toward peace talks in the 3-year war. Both nations will rely on Washington to enforce the deals. As part of the deal with Russia, the U.S. will assist in restoring its access to agricultural and fertilizer markets. According to the Kremlin, this will require lifting certain sanctions. Ukrainian officials warned that any movement of Russian military ships beyond the eastern Black Sea would violate the agreement and justify defensive action.
Bearish wheat. Everything out of the Black Sea is bearish wheat. That's your kind of theme for the wheat market this week. And I don't necessarily know that I agree. Like, I don't know. I don't trade commodities, but if I did, I don't think I would sell wheat on this Black Sea news because I don't think it's really going to do much to alter the supply and demand situation short term. I think that there's some algorithms and some traders who are trading this stuff, but I don't see it as being bearish wheat, but somebody does.
As part of the deal made with Russia, the U.S. will assist the country in expanding its grain and fertilizer exports. This will be achieved by expanding access to global markets, lowering shipping insurance costs, and easing port and payment restrictions for the country. This assistance, however, is contingent on the EU lifting certain sanctions. Russia's compliance with the agreement is conditional, requiring the removal of sanctions on major Russian banks and the restoration of Russia's access to the SWIFT payment system. Ukraine refused to endorse the United States' commitment to boosting Russian agricultural exports, citing its opposition to the easing of sanctions.
Bearish wheat, just like the first story. Part of me I don't like necessarily what I've been talking about the last couple of days. So yesterday we talked about these shipping fees on these Chinese vessels in U.S. ports and how it could be hugely detrimental to U.S. grain shipments because it's going to make us less competitive. And then at the same time, you see this headline, we're going to help Russia boost exports of grains and fertilizers. I don't know. Doesn't sit well with me, but that's the headline.
CF Industries Holdings fell to its lowest level in nearly 8 months on Tuesday. The fertilizer producer's stock dropped more than 4%, making it the worst performer in the S&P 500's basic materials sector. The decline followed the Black Sea ceasefire agreement between Russia and Ukraine, which, as we just talked about, raises the likelihood of reduced trade sanctions on Russia. The agreement is expected to increase fertilizer supplies from the region and reduce market volatility. As a major exporter of low cost fertilizer, Russia will benefit from easing tensions, which will likely lead to lower shipping costs as credit and freight expenses decline.
Bearish wheat. No, I'm just kidding. So this is maybe a good thing for you guys. So they're thinking more fertilizer flows out of the Black Sea, which has reduced the CF stock has fallen off. But maybe eventually this translates to cheaper fertilizer. I don't know that it's going to be that simple. Like I don't think it's going to be this is going to be a next week thing. But maybe eventually it helps kind of ease some of the input costs. What did cattle do yesterday?
Cattle futures were mostly unchanged after seeing some big losses early in the day. Live cattle were 37 cents lower to 47 cents higher. Feeders were 72 cents lower to 37 cents higher. Box beef prices surged yesterday. Choice was up a whopping $8.09, rising to its highest level since June 2023 at 335.19. Select was up 47 cents at 314.05.
Outside markets are mixed. Stocks are off just a little bit. Bonds are off just a little bit. U.S. dollars a little bit higher. Crude oil is up 56 cents, and the June WTI at 69.16. Have a great day, guys. We'll be back on Thursday.